Hello everyone, welcome back to my channel. If you are new to my channel, please take a moment to subscribe and hit the bell icon so that you can be notified when I upload the next video. Make sure you are watching the video till the end. Today, in this video, I will be sharing two fun facts with you all. So stay tuned. Alright, without wasting much time, let's dive right into the world of accounts. Before starting our today's class, I want every one of you to please take a notebook and a pen so that you can write down the important points which we will be discussing in our today's class. Today, we will be learning two topics. Number one, accounting cycle, and number two, branches of accounting. Moving to our first topic, that is accounting cycle. Now, what is an accounting cycle? It is a series of steps to manage the financial transactions which have taken place in business. In other words, we can say that it is a systematic process which involves recording, classifying, summarizing, and interpreting the financial transactions so that the managers can produce the financial statements. Here, when I say financial statements, what I mean by that, I meant the income statement, position statement, and the cash flow statement. The income statement helps us to identify the financial performance of the business, whereas the position statement, it helps in determining the financial position of the business, and it is prepared on a specific date, whereas the cash flow statement, it is prepared in order to know the inflows and outflows of cash. As I said, accounting deals with a series of steps. So in accounting cycle, we have 9 different steps. The first and the foremost step is identifying the financial transaction. The first and the foremost job of an accountant is to identify the financial transactions. Once the transactions are being identified, the next step is to record those transactions. Now, where are these transactions recorded? They are recorded in journal. Now, what is journal? Journal is the primary book in accounting where all the transactions are recorded in a chronological order. So once the transactions are recorded, the next step is to classify them and record them in general ledger. I mean, the transactions are posted in ledger. Ledger is the principal book or the secondary book in accounting. So first step was identifying, second step was recording, and once they are recorded, they are then classified and then posted in ledgers. Once posting is done, the next step is to summarize the financial transactions. Now, summarizing the financial transactions, they are done in trial balance, where the total of debits equals to the total of credit. Why it is done? It is done to ensure the mathematical accuracy in the business. If the trial balance is not tallied, then it comes to our next step where we have to pass some adjusted entries. Why these adjusted entries are done? It is done when the trial balance does not tally so that we can record the income or the expenses which have not been recorded in the books. Once the adjusted entries are passed, the next step is to prepare the adjusted trial balance. We prepare a new trial balance after the adjustments are done. Once that is done, the next step is to prepare the financial statements. As I said in my video, initial start of my video, that what are financial statements? There are income statement, balance sheet, and cash flow statement. Once these financial statements are prepared, then we close the accounts. Here, closing the accounts means temporary accounts like revenue account, expenses account are being closed at the end of the period. Why they are closed? In order to reset for the next period. Now, the last step in the accounting cycle is post closing the trial balance, which means we need to close the trial balance because it ensures that everything balances after closing. Hence, we can say that, in a nutshell, we can say that accounting cycle is cyclical in nature. Why it is cyclical in nature? Because it involves a series of steps which are repetitive in nature. I hope this accounting cycle concept is clear to you all. Yes, all right. Now, moving to our next topic. But before that, I want to share one fun fact with you all. As I have promised in the initial part of my video, I'll be sharing two fun facts. So, fun fact number one. Did you know that accounting cycle is like a recipe? How? Because it follows certain specific steps like identifying, recording, classifying, summarizing, and interpreting the financial transactions to our interested parties so that they can be so that they can know the financial performance and the financial position of the business. All right? Now, coming back to our topic number two, that is branches of accounting. We have so many branches in accounting, like the tax accounting, the auditing, financial accounting, cost accounting, management accounting, social responsibility accounting, and many more. But in our today's class, we will be discussing three branches of accounting. Number one, financial accounting. Number two, cost accounting. And number three, management accounting. Now, the first branch of accounting, financial accounting. What is financial accounting? It is a specialized field of accounting which deals with the preparation of financial statements like the income statement, position statement, and the cash flow statement. What is income statement? Income statement shows all the revenues, expenses, and profit or loss over a specific period of time, which are then reported to the external users such as the investors, creditors, regulators, etc. What do you mean by now position statement? It is a statement which helps in determining the financial position of the business. In short, it provides a snapshot of assets, liabilities, and equities at a specific date. The third financial statement which we prepare is cash flow statement. What is cash flow statement? It shows all the inflows and outflows of cash. The next branch of accounting is cost accounting. What is cost accounting? It is a branch of accounting which focuses on capturing and analyzing the cost which are associated with producing goods or services. Here, costs are categorized into four types. Number one, fixed cost. Then we also have the variable cost, direct cost, and the indirect cost. What are fixed costs? Fixed costs are those costs which remains fixed no matter what is the volume of production. Variable cost. What are variable costs? These are those costs which changes with the change in volume. Now, the direct cost. What are direct costs? Direct costs are those costs which are directly linked with the production of goods, and indirect costs are those costs which are not directly linked with the production of goods and services. If I have to give an example of fixed cost, the example of fixed cost could be rent. Example of a variable cost can be materials used. Example of direct cost can be raw materials. An example of indirect cost are utilities. Now, the last branch of accounting is management accounting. What is a management accounting? It is a branch of accounting which is focused on providing information in order to help the managers to take informed business decisions. This management accounting is used in various sectors like the healthcare, finance, and many other sectors. So, with that, we have come to the end. I hope this branches of accounting is clear to you all. In short, or in a nutshell, we can say that each branch of accounting plays a very crucial role in maintaining the financial health and transparency of the organization. So that is the end of our today's class. But before winding, let's quickly revise what we have learned in today's class. We have learned accounting cycle. Accounting cycle means it involves a series of steps which helps to manage the financial transactions so that we can prepare financial statements and we can communicate those statements with our interested parties. The steps which are involved in accounting cycle includes identifying the financial transactions. Once they're identified, then we record them in journal. Once those are recorded in journal, then we post them in ledger. After that, we summarize them in the trial balance. If the trial balance does not tally, we pass some adjusted entries. After that, we prepare the adjusted trial balance, and finally we make the financial statements. Once everything is done, we then close the accounts. And the second topic which we have discussed in today's class were it was the branches of accounting. There are several branches of accounting, out of which we have discussed three branches: financial accounting, cost accounting, and management accounting. I hope these topics are clear to you all. Alright, coming to our fun fact part 2. Did you know that the earliest non accounting records date back over 7,000 years to ancient Mesopotamia? These records were used to keep track of trade and grain storage, making accounting one of the oldest profession in the world. So I hope you have enjoyed today's class. If you did, please give it a thumbs up and share it with your friends and relatives. Thank you so much for watching. See you next time.